Welcome to Game Changers Silicon Valley, a show about today's emerging innovations that may be the game changers of tomorrow. My name is Jim Connor, and I will be your host tonight. Tonight's show will start with the methods and processes followed by investors to find those companies that are a fit for seed funding or are a fit for Series A funding. I'm pleased to have two guests who can provide insights into this process. My guests are Ralph Eschenbach, a well-known angel investor, past president and current board member of the Sandhill Angels, and a board member of numerous portfolio companies, along with Ephraim Lindenbaum, the founder and managing director of Advanced Ventures, a venture investment fund and accelerator that invests in ag tech, clean tech, food tech, mobile communications, and information technology. Ralph, Ephraim, welcome to the show. Thanks. Delighted to have both of you here. This is a new series on the investment side of Silicon Valley. It's going to be, I think, a very popular subject, I believe. So I wanted to start a little bit here with Ralph. You just tell us about angel investing. What is it about, and who does it?
Angel investing is done by individuals that have made some money in the Silicon Valley area typically, but not always. And they want to give some of that back to start companies and to mentor startups in the space where they have some familiarity. So we're investing our own money, and we try and find companies that we think will be successful and that we can get good value out of in the community.
Now, there's lots of individual angels out there, and there's angel groups. Is it that people choose to do it on their own versus being a group? And if they are in a group, what are the advantages of a group?
I'm with Sandhill Angels, and I invested for about 6 or 8 years as an individual investor until I got involved with Sandhill. I find that the group provides a lot of additional benefits. Number one, you've got, at least with Sandhill, we've got about 100 investors, and this gives a much broader scope of knowledge. We can very quickly find someone that can do diligence on a company, almost no matter what space they're in here in the Valley. It also allows us to invest smaller amounts of money into a broader number of companies, so we get some diversification. So there are several reasons why I think a group certainly works better for me.
Mm-hmm. Ephraim, you're a founder of Advanced Venture Fund, right? It's Advanced Ventures, and then it's an Advanced Venture Fund. I'd like to get maybe an overview from you about exactly how does a VC fund work? Are they all kind of the same, or are there different variations?
Well, thanks for asking, Jim. I mean, I think fundamentally venture funds have historically followed a fairly similar arc to things like private equity or even hedge funds. Fundamentally, we use the same structure that they do in terms of how we essentially are modeled. We're essentially a big partnership, not dissimilar from Ralph's description of the angel environment, but really the differential is where our capital comes from. As opposed to individual angels, we actually source our capital from a lot of what we call institutional investors. Those could range from pension funds to municipalities, even into corporate strategic investors, as we call them, or today oftentimes an area called family offices, which is really the correlation of high net worth individuals into a structured environment to invest. And then also, and one must not forget, we also invest our own capital. Oftentimes, what we call our partner commitment can range from several percentages to up to 20% of the fund as a whole.
Mm-hmm. I've always wondered about that. Is it easy to find out if a given venture fund invests their own capital, if the members who run it?
Sure. Well, luckily we live in a very opaque environment. So from our standpoint, we work really hard to keep a lot of that data internal, and that is for a whole host of reasons. Number one, we want to make sure that there's a level playing field. We also want to make sure that our investments and our investors believe that we're really making those investments on a very structured and reasonable basis.
Mm-hmm. But all VC funds then do kind of require their partners to put some money in, or is it?
It's not a requirement. I mean, it really depends. It also depends on the phase. There are large, very large VCs today, which fundamentally look a lot like private equity funds. 20, 30, 40, 60, 100 different partners at some tier within that organization. So certainly if you're a junior partner coming in and your respective carry, which is your percentage of the fund total, maybe just a few basis points, your expectation of partner involvement would be much less.
Mm-hmm. Ralph, what kind of investment structures do the Sandhill Angels use typically?
In the form of the investment, usually we invest in either with convertible notes or we invest in a priced round, a Series A preferred or a Series Seed preferred. Those are the two principal ways that we invest.
I'm going to get into the weeds a little bit. What is a convertible note?
So a convertible note is money that you put into the company, and upon a subsequent round, it will convert into shares of that round. Frequently, it has a discount because the money is a little bit more risky earlier on, so it'll get a 20% discount going into that round. Frequently, it will have a cap, so that if the company got a big step up in valuation, the people that put the early money in would be able to capture some of that step up, not just the discount. But it's basically a note that has the terms of a note, interest, and a maturity date, and gets paid back.
It's not currently the practice that a convertible note can just simply mature and you get your money back. If it matures, it rolls into stock. Is that correct?
Not always. It depends on how there's a lot of corner cases in convertible notes, and that's certainly one of them. What happens when it matures? But it's rare that you get the money back, because usually if it matures and they have not had a follow-on round that converted, it means the company hasn't done very well, and they've probably spent your money and have nothing left to show but some prototypes or some demos and some salaries that you've paid, and so there's no way to get those funds back.
Okay. Yeah, it's spent. It's gone.
It's gone.
It's burned. What are the major challenges today in the VC community? There are many, I think.
Sure. So I think fundamentally the issues just around the current frothy investment environment. Today there are far more different flavors, if we will, of venture funds than there ever were in history. From our standpoint, we've had a very measured approach to this. However, there's been a huge influx of capital into the venture environment since the Jobs Act was created. Number one. Number two, whenever we have an public market environment, that's throwing off cash. And if you think about the concept of a balanced portfolio, there's always an asset allocation to what they consider the alternative class. Venture funds, private equity, et cetera, fall into that alternative class of investment. Historically, that's been approximately 3% of a balanced portfolio. From that standpoint, if you have a $100 billion portfolio, $3 billion going into venture capital.
What type of organizations are your limited partners? Not who they are so much.
Sure. So we are only family office based.
I see.
We have historically avoided the traditional institutional investors like pension funds and so on for a whole host of reasons. Predominantly, being that we're in our third fund, the ability to roll over on investors from fund to fund, really able to leverage their value, oftentimes expertise in a category is very important to us.
Yeah. Family office is an interesting term. It sounds very folksy, but indeed it's actually very wealthy people who have set up offices to manage their portfolio, hiring any range of portfolio managers. And so it's a pretty sophisticated, they use all types of analysis, all types of performance, and then they take a small part, maybe that 3 to 5%, and put that into other classes, other alternative.
Correct.
That's where you come in, is that correct?
Exactly. We're the alternative asset class.
So Ralph, what's the process over at Sandhill? You had all these here in Silicon Valley. It's a prominent name, big firm, big group, and has a history of doing a lot of deals as a lead investor, as follow, and as a participant. Entrepreneurs all over the place here, and what's the best mechanism for them to get traction?
The best mechanism to get traction in our group is to know somebody in the group. That's
okay. Well, how do they get to know somebody in the group?
But that aside, you can apply on our website. We see probably 60 to 80 business plans a month. Out of those, we go through a screening call where members have ranked these deals, and out of that screening call, we select about 6 or 8 that go to a screening meeting. The company will come in and give about a 15-minute pitch, those 6 or 8. We'll pick 2 or 3 of those to go to the dinner meeting. Out of the 2 or 3 that go to the dinner meeting, we'll usually pick 1 or 2 of them individually. Individuals express their own interest. They're investing their own money. They express their interest, and we form a diligence group around the interested parties that are interested in investing in that company. We do diligence on the company, and usually within a couple weeks to a month, we've got a decision made as to whether we're going to invest in the company or not. Sometimes the amount of money they need to raise is more than we can provide, and so we'll either lead the deal with a term sheet, or we'll join a deal that they've already got started with some other investor that's put in a term sheet or a convertible note term sheet. And then to give them the extent, given we raise the funds, we'll make an investment and help the company.
So one of the strengths or aspects of an angel group is the typically the domain knowledge that might be there among the investors.
Yeah.
I mean, they can bring a great deal of credibility and analysis to that. You yourself are an inventor at some level, correct? Maybe you can talk a little bit about your domain knowledge and how you have brought that to some of the Sandhill companies.
I developed a GPS receiver, one of the first that demonstrated the commercial viability of GPS in the 70s at Hewlett-Packard. HP decided not to get into that business, and Trimble bought the rights to that, and I worked with Charlie Trimble, my boss, for a year on a next generation, and then he hired me as a VP of engineering, so I managed that division for quite a while and ended up being CTO at Trimble and retired in that position.
It's a great history. So whenever any of these companies come around with GPS technology on a cell phone or
location-based services or mapping,
it's sort of like you're the guy that's going to take a look at them, right? How does it work in the VC firm? Do you only do deals where you have the domain expertise, or do you use?
Sure. Well, I mean, you know, we fundamentally work across our core themes or sectors that we invest in, and we do have a significant amount of expertise in that category. Now, we do use quite a bit of outside expertise. Oftentimes, if it's a highly technical deal, we'll bring in several of our resources. Oftentimes, those are executives in residence with us, former entrepreneurs we've invested in, and we trust their feedback across the sector.
Ralph, do you share in your perspective the fact that the market's frothy? It does seem very frothy to me, and do you share that perspective?
We have definitely seen valuations going up in terms of caps on these convertible notes and in terms of Series Seed rounds based on where the companies are. So yeah, I think we have seen that. In my opinion, the entrepreneurs are making a mistake to ride along with that because their company just gets lost in the froth. If they would cut the cap in half, that will double the value of the return to the investor, but it only cuts their return down usually a few percentage points. And so they'd be much better off to get that money in quickly with a lower cap and start working on whatever their product is, rather than insist on a high cap and just wait and wait and wait and get lost in the froth.
Mm-hmm. You have to negotiate quite a bit on these prices and valuations also? Or?
You know, we take a much more holistic approach to it. You know, we're really looking at what the company needs from a capital standpoint, and then working our way from there. I mean, then at that point, we've got some tried and true approaches to what kind of capital allocation, equity allocation the, you know, fundamental founders would have, what the employee stock option pool would look like, and then we work our way back from there. If the deal terms aren't really acceptable to the entrepreneur, then there's probably some fundamental problems in the deal to start.
Mm-hmm. Good. I'm going to bring up one more question, but before we go there, I want to let each of you talk about what's the best way to contact you.
Great. So there are a number of ways to get in touch with us. I mean, fundamentally, LinkedIn works well. You can reach us via LinkedIn at Advanced Ventures. You reach out to me, Ephraim Lindenbaum at LinkedIn. Certainly, Twitter is a great way to get in touch with us, at Advanced Ventures, so just very simple there. And then certainly our website as well, although we traditionally look at deals that are brought by trusted advisors, angel groups, et cetera, and that's our primary focus for deal sourcing.
Mm-hmm. Ralph, what's the best way I mean, if I don't know any Sandhill Angels, what do I do?
Well, certainly we have a website, and you can go to the website. That's probably the best way. And when you submit an application there, it'll ask for the full details about your investment. We also have some information there that talks about sort of what stage we're looking for and the kind of companies that we're looking for, and that will help you decide whether that is the right place for you to apply or not. But and when you apply, you can put my name as a reference that you saw me on the show, and you're using that as a reference, okay. and we'll process it from there.
That's very generous of you to do that, and I'm sure your mailbox is going to be full tomorrow. So, Ralph, I want to thank you so much for coming on the show. Ephraim, again, my appreciation for your time and your information. I think it's very valuable to our audience, and there's no question, I didn't even get to half the issues. So you guys are both engaging, been a lot of fun, and I look forward to a return visit at some point.
Looking forward to it.
We'll do it.
Thank you, Jim.
Thanks, Jim.
This is Jim Connor. I'd like to thank you for joining us for this week's episode of Game Changers Silicon Valley. Each week, we'll address an area of innovation that may emerge as game changers of tomorrow. We look forward to your interest and participation in the upcoming shows. Thank you, and good night now.